Hi friends, Simon here from informedtrades.com. Today is January 8th, 2014. It is 8:02 a.m. Eastern Time in New York, which is 1:02 p.m. GMT time. Time to get started with our daily chart review. This is the process I use in my trading, reviewing the charts, the daily charts each day at this time. Okay. So here we go, Euro US dollar. Now, as we know, or as I've stated before in these previous chart reviews, I always start with trades that I currently have on. I'm in a Euro dollar position now. Now I entered right about here. So this position, let's make that black. So this position is currently at a floating loss, and my stop is actually near my stop. My stop is somewhere right around here, I think. So we'll see. It's definitely not. I mistimed it, unfortunately. This, in hindsight, I should have waited for this candle to close, but it is what it is. We'll see. Also, there was a order I placed yesterday, Euro New Zealand, that ended up getting filled. So let's take a look at that chart. Euro New Zealand. EURNZD. Here we go. That is also at a floating loss at the moment. Yeah, I entered right. He entered it basically at 64. Right there. My stop is at, where is my stop? It is 62.85. So the stop is right here. Oh, nope, not there. Right there. Okay. So you see where we are. This position, nothing to do with either one of these positions yet. Just basically wait and see what happens. Okay. Now I do also have two orders, still two pending orders. Now they're pretty far from getting filled. It looks like they're not going to get filled. One is on Euro Canada, and I'm actually going to go ahead and cancel this order because I don't want 3 long Euro positions available. And this one, well, I sought to get filled after this candle. I tried to get filled, or excuse me, after this candle, this green candle, I tried to get filled, but the market went off without me. I had the entry order right around here and never came back. So now we have what this looks like, a reversal candlestick, but more importantly, I already have 2 long Euro positions on, so I'm going to go ahead and cancel this as I don't want a third. So if one of these Euro positions, if it goes in my favor and I can move to break even, or if it gets stopped out, then I'll reconsider long Euro positions, or short Euro positions for that matter. And a short Euro position is something I would consider now. It's unlikely, and I rarely have 2 contradictory positions wherein, like long Euro dollar but short Euro Canada. So in that position, it's sort of a synthetic dollar CAD position. But in this particular instance, that's not the case. I don't see a short Euro trade that I like, and I already have enough exposure to long Euro. So I just canceled my Euro Canada position. Now Canada Swiss, that's the other order I have. Okay, and that is just I looked to get filled right here. Had an order at 85.36. Didn't get filled, and that was based on this candle, but the market just kept going without me. Okay, so basically what we have now, to recap the situation: long Euro dollar position, long Euro Kiwi position, Euro New Zealand dollar. Both those have slight floating losses. My stop has not been hit yet, so we'll see how those positions end up turning out. Nothing to do but just sit around and wait. Now, euro, it's unlikely, there's almost no point in looking at other euro positions because I have enough exposure to the euro, as I mentioned. But just for good form, I'll take a quick look at them. Euro, Australian dollar, nothing. Actually, what I'm mainly looking for, because I have enough long euro exposure, is to see if there's a short euro opportunity. And all of these, the euro is basically in a bull trend at the moment. That was Euro Swiss that we just, Euro Pound. Let's take a look at that. Okay, now this is actually in a bearish trend. And I did have a Euro Pound position that I closed for a small profit. Turns out maybe I should have kept that open. It wasn't really, I didn't like the price action I was seeing on it. Normally, I like to see the trade go in my favor pretty quickly. That tells me that my analysis was correct. When it moves around or spends a lot of time near break even, then I'm a little hesitant. And when I see signs, when it goes to if it goes to my favor and I see a reversal sign, I'm more likely to close it out. So that was why I closed out the Euro Pound position. But if I do, I think here is a level that will be the first. It needs to pull back to at least 83.45 before I could consider entering a short position. So nothing on Euro Pound at the moment. And Euro Yen. Don't want another. This is still in a bull trend, so don't want a more long euro position at the time. And that looks at that's all the euro pairs that we had on. Now we can go to the pound. Pound Aussie. Okay. Still same idea here. Need more of a pullback until at least here, perhaps more. But at this point, it's just in an uptrend, and until we get a meatier, more substantive pullback, I don't think there's an opportunity. It's just chasing. Pound CAD also. See, still need a pullback. Pound Swiss. So pound has really been on a tear. Bank of England, their central banker, or Bank of England, has come out and said, tried a verbal intervention of sorts. They're complaining. Excuse me. They're complaining that the pound is too high in value, as a common complaint amongst central bankers of the world today, especially in developed economies, larger economies looking to devalue their currencies. But the market is still sending the pound higher. I do expect the pound to really, I think it's a lot like the yen, where the yen was rallying for years, and then all of a sudden we had the big reversal. The pound is going to have, in my opinion, a similar type of reversal. However, let's wait for the technicals to show that. At this point, it's clearly in a very strong uptrend, and it's not giving much in the form of pullbacks. Pound yen. This is, yeah, the yen has had the same scenario. It does look like there's a channel here. Now I wouldn't trade. Oh, that's annoying. Ignore that. That was not what I meant to draw. I meant to draw it from here. Okay. And okay. So there's a channel of sorts. To me, this isn't worth, I need more than just buying here, or buying at the channel bottom. I really want to see it fall to a support level. Let's see. I could see it fall to there maybe. But in any event, I need to see more of a pullback. Perhaps if I was already in a long pound yen position, I'd be willing to add by seeing it fall to the bottom of the trend line, bottom of the channel. But not being in the position yet, to get my initial base in, I need to see more of a better pullback. And this is the same theme for those who are watching over the past, for this week. This is the same theme we've been seeing over and over. Okay, pound Kiwi. Now this is really interesting to me. We have a triple doji. You know, it looks like this is from a Wyckofian perspective. This is a trading range. Signals potential accumulation. Yes, so let's see. Let's look at if there's a support level where this is occurring at. That's a much better support level. No, here. Hmm. Um, this is interesting. So part of me is tempted to uh, put an order on here because of the strength of those. I view that as a very strong signal. Those three narrow candles right there, or three small candles, three doji-like patterns. But I don't see the support level. I don't see it at a support level that I would like to see it at. You know, you could argue that it's occurring. Let's just draw that line. You could argue that this spike here, this candle spikes all the way up here, that makes it something of significance. It comes almost close to spiking to touch it here before going down. But to me, that's not enough, really. I'll leave that on there, make it a little lighter, a little thinner. To me, this is the much more interesting support level. Um, you know, the market really bounced off here. It clearly bounced off here, rallied at these levels. So I really want to see price fall to 96.35. And I'm also already in a long Euro Kiwi position that is currently having a small floating loss. So I still like, I still like that idea, and I still like to short Kiwi against, you know, I like it against the Euro, and I see that opportunity shaping up against the pound. I already have some exposure via the Euro. Let's see if it falls more. If it falls to this level, then I may be especially interested. But at this point, you know, like I said, I really like to hold out for opportunities that I'm really comfortable and really confident in. If that means passing on 90% of stuff, so be it. Better to pass than to, in my experience, than to chase and have a trade that's not really that good and goes against you, then you end up losing money. Okay, pound dollar here. Again, need more of a pullback. That's the level I'm looking at here. If we can pull back to here, oh, now we can go back to our normal lines. And you can see, you know, this is tested here. Market responded. You know, bears entered, push it down. Then on the flip side here, bulls entered, big candles, confirmation, push it back up. So if we can fall at 64.24, basically the theme with the pound is that just need more of a pullback. It is clearly in a pretty strong uptrend. Okay. That goes through our pound trades. Let's go down to the US dollar now. Dollar Canada. Man, look at that. Okay, so it would have been nice to get filled. Here's where, if I had entered a good opportunity, would have been right there, or maybe a little higher. Right there. So, you know, you see that here, and then if you can get, you know, filled on this candle, that'd be perfect. Then you'd have a really nice target. But I did not do that, so no point chasing now. That was in December. Okay, dollar Swiss. Right now, this is mirroring euro dollar, so I already have some exposure here. This is not a good sign for my euro dollar trade because now it's starting to look bullish for dollar Swiss, which means it would be bearish for euro dollar, and I'm long euro dollar. Dollar Swiss and euro dollar are very correlated, but we'll see. We are at this resistance level here, or this. Coming close to that level. So let's see if the market responds there. Are we slowing down? We can look at the 4-hour chart just to get an idea if price is slowing down as we approach that. Nope, still going strong. So sometimes we'll do this, looking at a smaller time frame to see. It'd be interesting to see if the market shows signs. If we see smaller candles, some reversal stick candles, signs of exhaustion as we approach this resistance level. That would be a great sign of a reversal. However, we're not seeing that. Clearly, the momentum is still strong. So like I mentioned, it's not a great sign for the euro dollar trade, but we'll see what happens. Definitely not. I don't like to generally. If it hits my stop, I'm risking little enough where if it hits a stop, it's not the end of the world. I don't need to prematurely close it. Unless if it's moving in my favor, I may be interested in prematurely closing it. If there's signs of reversal. Okay, dollar yen, legitimate signs of reversal. Dollar yen, same story as with pound yen, just need more of a pullback. Right there, really would love to see a pullback to the levels that we saw in May of 2013, quite a while ago. But that's a key. You see, that level sticks out. It's a key support level. Okay, so nothing on the dollar pair. Oh, one more. Dollar Singapore, which that's another example. This just hasn't given the pullback that I hope to see. But it looks like it could be reversing now. So at what level, I don't want to short here. Some counter trend traders may be interested in shorting, but something I am interested in doing is identifying a level at which I would go long. And that might be here. Somewhere maybe a little higher. Maybe like there. It's not a great support level. Now in this instance, this is another instance where Fibonacci retracement can be very useful. So let's say we go from the breakout here all the way to the high here. Okay, so this is below the 61.8 retracement. Let's see if we go from this swing point. Okay, so now we're actually need a further pullback. So it depends on where you measure from. Excuse me, this is not a great setup either way, but I do think it's interesting in some regards. So we'll see. We'll see how price is behaving. If we get if we get any signs from candlesticks, that will be interesting. But at this point, nothing really to do. Okay, going to Canada pairs. Canada Swiss. Nothing here really. Oh, this is we actually looked at this earlier. I had the order, it went without me, so it didn't get filled. That's something that I need to work on and improve on. I have a number of orders where this happens, where if I had placed, and this isn't, I don't really blame myself too much. There are other worse examples. But I had the entry order right here, which I think is a good level to put it at. But I just didn't get filled. You see the market just, once this candle occurred, it just kept going, didn't give another pullback. So let's look at CAD yen now. So if we do get another pullback, we'll see. That and we may. And that entry order is I still have that on. So I haven't canceled that one. CAD yen. Okay. Now this could be interesting. Okay, we are at a major support level now. Okay, and I think we may have a channel. Yes. Okay, so we were at a major support level, which coincides with the channel. This is interesting. Now let's see if we go to our 4-hour chart. Okay, and we have what resembles a hammer here. Okay, so this is an instance. I'm going to take this trade, put on an order here. Okay, back to the daily. Enter at the black line, which is 96.90 something. 96.90, in fact. Okay. And in terms of where the stop will be placed, maybe here. No, we gotta put it a little closer. That looks like it might be 96.05, let's say. And let's target the top of the channel. Okay, does that give me, so we're risking about 96.90, 96.05. So we're risking 85 pips. And we are targeting let me see that. It is 92.13. Okay, so I need to play around with the risk. I need to probably target this high here. Okay. Then I get the reward risk of at least 3-1. So this is a much better, this is the setup that to go for. And we're targeting this resistance level. So I thought maybe we should target this one here, but that doesn't make the trade lucrative enough, which is established here. So this one makes it interesting. Now, as I have done before, if it was something I may do, especially with this trade, and it depends on what other trades I have on at the moment, but if it goes here and it starts seeing signs of reversal, I may take half off and then let the remaining half go for the full distance. But we'll see. At least at the outset, if the price just keeps going and soars right through this, then that's not really something I'll do. But at least at the outset, the goal is to enter at 96.87, stop at 96.03, and target 194. So that is the basic order. And I'll have this documented in a post on Informed Trades on my blog. You'll see the screenshot and the exact parameters of the trade. Okay. Excuse me. Now let's move to Australian dollar, Aussie CAD. Yeah, we are seeing. Excuse me. We are seeing numerous signs that the Canadian dollar is ready to rally. So in here, is it going to reverse from here? Really, I would need to see it pull back to around this level. So whenever I see, CAD yen to me seems ready now. Right there. Aussie CAD may not be ready yet, but if CAD yen, if the Canadian dollar continues to, or maybe ready tomorrow, for instance, tomorrow we may reach this level. So we'll see. But that's something to consider. For if the position goes in my favor and I'm looking to add to it, sometimes it's good to add via another currency. So if I want to have a long Canadian dollar, if that really ends up being the trend, and I want to pyramid into that trend, meaning add more as the trend goes in my favor, I can do that via CAD yen, like we just saw, or perhaps via this pair or some other Canadian dollar pair. And that offers another form of diversification, which I am a big fan of. But at this point, still more waiting. Aussie Swiss. And just draw this level here. So we're not doing anything until price reaches that level at least. Maybe still won't do anything, but let's at least wait till price can get to that level. Aussie yen. This is the same. We've seen this for a while. We talk about this every day where it's in that trading range that's going back to September 2010. So once it breaks out of this range, let's actually draw that range just to give an idea. Oh. That didn't work out too well. Let me try that again. Well, basically, once it breaks out of this range that you're seeing on the screen in this purple box, then there may be an opportunity that I'm interested in. Until then, I've gotten burned a little bit. It's choppy. It's clearly not a range. So I'll hold off on Aussie yen. And I mentioned this before, but it's worth reiterating. You know, I am trying to illustrate my thought process here. If I'm moving a little quickly, part of it though is this, you know, developing comfort with spotting support and resistance levels, and that just comes from, you know, spending a lot of time looking at charts. I don't know how much of a shortcut there is to that. Hopefully, these videos are providing some assistance, but a lot of it is definitely just looking at charts. Putting, you know, Malcolm Gladwell has the idea that you have to put in 10,000 hours to gain a degree of proficiency or expertise at something. I think that applies to a lot to technical analysis as well. Putting in your time, your chart time. Okay, so Aussie QE, you know, still need to pull back. This is a bearish trend, so some counter trend traders may be interested in going long here. I'm not. You know, I'm more interested in at what level can I pull back to that I can short from, and maybe here, but we'll see. We've still got a ways to go, so we'll see what happens. Aussie US dollar. Okay, now we do see some signs of bullishness here. We have patterns of higher lows. However, I'm not looking to go long because the trend is still ultimately bearish, and maybe if it pulls back to, we still have more of a pullback, you know, 91 at least. So got 200 pips to go. You know, somewhere right around there. This level, I think, would be an interesting potential short, especially if the 50 SMA can be there as well. Okay, that's it for the Australian dollar pairs. Now let's wrap things up looking at New Zealand dollar. Okay, Kiwi CAD going strong here. No signs of reversal. So we did see Canadian dollar show signs of strength against other pairs. We're not seeing that expressed against New Zealand dollar. And it's still, you know, great to get in here, but other than that, not so much. Okay, nothing here. I did have some long New Zealand dollar positions that were closed out for profit towards the end of 2013. And clearly it would have been advantageous to hold on to that longer. Of course, hindsight is always 2020. But at this point, there's nothing to do. It's clearly just in a strong uptrend. And so we just have to wait for a pullback. Kiwi yen. So we are seeing the same price channel, right? We've seen this a lot with the yen. Price channel here going back to around October 2013, late October. Nothing really though. CAD yen is the one that's at the bottom of the price channel, which is the trade opportunity we looked at earlier that I'll be placing an order on later today. And Kiwi dollar. Okay. Nothing here. This is still a little choppy. So, we do have a pattern of higher lows. However, we also have a pattern of lower highs. So this type of consolidation, we basically have a consolidation. This is actually a little interesting. It's not, I mean, some traders will like to trade this opportunity. I'm not one of those types of traders, but you can see there's clearly a consolidation going on. Let's get this trend line. Okay, so we have that, and then we also have from the bottom. This didn't work. Okay, we also have, you could see this illustrates crudely what I'm talking about, where it's a pattern of higher lows as well as lower highs. This type of consolidation often precedes a breakout. However, which direction is it going to go in? I don't know. Once that breakout happens, then there may be an opportunity. I would kind of just from a trading bias. Well, it could go. I mean, I would personally have a slight bias where if we break it out to the bottom here, and then there's an opportunity to enter at this level. Let's draw that. If there's an opportunity to enter like right around here, which we'll see, we need to see, the market come down and then come back up to test this level. But if there's an opportunity to go short here, it could set up a really nice target down here for 400 pips. We'll see how that ends up shaping up. But for now, it's just consolidating, and some traders will like that. There are strategies where you can just play a breakout, meaning you can basically put a trade, the volatility will increase, which is you don't necessarily need to place a trade on direction, but just that a big move will occur. However, I'm not as familiar or well versed with that. I'm much more comfortable with directional trading using technical analysis. Anyway, that's the chart wrap up. Just to close with the one order I'll be placing, CAD yen. I risk 1/4% of my account based on each trade. So this is the setup, and I'll have this documented on informedtrades.com on my blog there. Okay, and that's about it. That's about it. Any questions, anything you want to add, join us at informedtrades.com. Thanks and best of luck in your trading.